Good morning. Predicted Trade family, hope everybody's doing well. So, yesterday, we had an interesting day where we were stuck at the bottom of these squeezes. You can see how we reached down, tagged this old trend line and kind of the extent of the bottom of the squeezes, and then reversed right back up. Market was just kind of waiting and positioning into MU earnings last night. And we can see that the reaction to MU earnings went well. I've been talking about this for a couple of weeks, folks, how MU earning was approaching. After we got through FOMC, I said we want to keep an eye out for MU earnings. They're the first in chips, first in tech to report. And it starts to set the tone. So for a couple of weeks I've been talking about a thesis where we could start to actually rally after FOMC into April. April is traditionally a bullish month in a cyclical fashion. And we are kicking off a new earnings season. Whenever MU reports, that's kind of, for me, a big flag for a new earnings season starting. And, it was all eyes, in my opinion, on MU to see what the reaction was. Notice that I say reaction instead of the numbers, because as we saw, the numbers on MU were a miss, but it went up. There's a number of reasons why this can be. It was already projected that it would be a miss on earnings per share. And if you look at the revenue, it wasn't that much of a miss, really. In fact, it was pretty decent revenue. So it could be for investors, they're saying, chips are making a good buck. Yeah, there are supply chain issues, and at one point there was more demand than supply. I think it's showing that there's still heavy demand and chips are still going to be turning good revenue. Still a good investment. So, I talked about it for a couple of weeks now, and especially yesterday, we could have a kind of a slow day where we look like we're going to dump, but we hold up key things. Yesterday I said I want to see us hold that 39.87.5. We dipped through it just to tag 39.80, and then we got back above and held and took off. And now we find ourselves way back up at the top of the range. I drew recently in prep our support down below near the daily 200 and our resistance near this 440 to 450. Every time we get near it, we tag that zone and reverse. And here we are right back at it. We do still have GDP and PCE this week. We take a look at the economic calendar. Today we have a little bit at 10 a.m. home sales and Barr at the House. He was at the Senate yesterday. And then tomorrow we have GDP, jobless claims, some more Fed speakers in the afternoon. Then Friday's the big one with personal income and spending, PCE, very big. And University of Michigan data at 10 a.m. A little bit of Fed speakers in the afternoon. So, we want to see how this data goes and what the reaction is. GDP is a direct reflection of what's going on with inflation. So, very key number. They're tied together. So overall, looking at where we're at, if you look at the last 2 days, we were stuck under 40.20, consolidating. Now we're over 40.20. Wouldn't be surprised for some dips back to 40.20 to consolidate above it before trying to break out higher. We're also back at that daily 50, this purple line at 40.30. Yesterday, we did a pretty decent job of holding the daily 8, daily 21 most of the day. Slept it for a little, but then back above. So it becomes pretty simple. We're running back up to the same resistance that we have been rejecting. We have been stuck in this range for a couple of weeks now. So it wouldn't be surprised for us to tag this range, this resistance, pull back and consolidate 4020 or above and try to keep running into that resistance. And I also wouldn't be surprised if we take a dip, maybe not today necessarily, but after some data drops for GDP and PCE, wouldn't be surprised for another dip down to revisit this 3996 and 4005, where the daily 21, daily 8 now sit. They moved up a little bit from yesterday since we've gone up overnight. So we've got, a number of little zones below for support on retests. We know where our resistance sits at that 40 to 4050. And we're nearing the top of a 4-hour squeeze. If we can get above that 4050 and hold that zone on any retest, then it's a fight to get up to 4056, 4071, 4080, the big key one. You can see 4071 and 4080 is where we reverse a lot. If I pull up something like the daily, I can show you a ton of top candles that stopped at 4080. It's this thin little zone. It's probably even hard to see. But it's this very thin little zone. It's right here at 4075, 4080, 4175, 4180. Oh, I'm sorry. That's a higher zone. The 4080 zone. Yeah, right about here. We've rejected it a couple of times now to send us back down. And if we go back a little further, yeah, it's kind of where we rejected previously as well. There we go. So 1, 2, actually, sorry, let me just, there we go. There we go. So we had 1, 2, 3, 4, 5 rejections so far. We are setting progressively higher lows. I've seen too many people dropping charts where they're like, oh, we're setting lower highs, lower highs, lower highs. And they just are completely negating the higher lows that got us here. Basically, we're in a big wedge on the daily, folks. And yes, there was an old wedge that we started to break out of. We came back to retest, and we're still kind of struggling. So in a way, you can also update or draw a new wedge across like this. And, I've got this trend line already that is an older one. So you can see we were in a wedge, we started to break out. Now we're still in a wedge trying to break out. And as we go into earnings season, it could be that this daily wedge, this daily range, is where we're going to stay for a while. While we get through earnings seasons, while they rotate into things, out of others, yada yada. So, overall, there is a thesis for trying to go up to test the top of that wedge. And that we've spent enough time down here bouncing off this level, bouncing off the daily 200, holding above our daily moving averages, that we're ready to try to push away from them. Obviously, we do have resistance, we have daily squeezes up above, but we can start to push into those and they'll open up and whatnot. So, either way, for today, wouldn't be surprised for a dip to that 4020. For the last couple of days, we've rejected 4030, 4020, stayed below it. Now we're about to open above it. So wouldn't be surprised for a dip to retest before going higher. If we lose 4020, we want to see 3996, 4005 hold. If we start to lose those, we're going to revisit yesterday's lows around 3980. And if we lose that, back down to this 4-hour squeeze at 39.61. But if we can hold up in the top half of this 4-hour squeeze, and we start to push, we got that 40.40 to 40.50 zone to get up and try to take out. Past that, 40.56, 40.71, 40.80. Moving on to NQ. Overall, NQ's been holding up really well. You can see this 12.690. Yesterday I said I want to see us hold that. Now we did slip through it and reject it and set new lows. But ultimately, end of day, we got back above it. I mean, it's worth looking at. This is how they try to shake people out of a long move before it starts. Or they try to trap people short before reversing back up. And most people aren't keeping track of stuff like these squeeze clouds. For me, when we have a nice thick squeeze cloud with some red, meaning it's mid-compression, that tells me that it's going to take a lot of energy to get through it. A lot of volume, a lot of selling pressure. And yesterday we just didn't see that. We saw the slip early, down into it, and then it just kind of held. We saw that midday or late day dip lower, and then right back above. So overall, we're back above 12,800 on any dips. Wouldn't be surprised to retest that 800, 790. You can see it's what we rejected pre-market. It's what we fought right back up to, and now we're above it. So that's your first spot to try to hold, 790, 800. If we lose that, likely coming back to test that daily 8 around 750. Should we lose that, it's right back down to the bottom of the squeeze at 690. But if we can hold up at this 750 or 790 and start to push through pre-market highs around 850, then it's a play up to 890, 900, and then up to 960 at the top of the 4-hour squeeze. And that 13,000 where we topped out on FOMC and the day after. We're ready. Since coming down near the 1700, Ruddy has kind of changed tones. You can see the down channel we were in, we broke out of it. And, Ruddy has been making some good moves to the upside. Yesterday in the morning, the Ruddy and the Russell and YM were leading to the upside. And as you can see, now we're up to the point where we're starting to break out of this 2-hour and 4-hour squeeze. So on Russell, would like to see a hold around 1775. You can see it's kind of the high from yesterday, the day before that, last Thursday. So now that we're back above it, would love to hold 1775. At the worst, it can dip to 1770 where the daily 8, daily 15 are. But want to see it get back above 75, 1780. And if we can keep pushing through pre-market highs at 1788, we can get up to 1800 where the daily 21 sits. If we lose that 1770 where the daily 8 sits, then it's back to the zone we held yesterday, around 1750 to 1760. YM. Yesterday did a good job. It was opened kind of in between the daily 21, daily 8. At the lows, it got down and tagged the daily 8 and then reversed right back up. Now we're going to be opening above yesterday's highs, so keep an eye around that 32,750. Yesterday's high, previous day's high, last Thursday's high. So now that we're back above it, would love to see us hold that 750. I'd let it go down to about 675 where the daily 21 sits at the worst. If we go below that 675, then we're probably coming back to this 32,500 for a test, kind of where we bounced yesterday. But if we can hold up at that 32,675 or 32,750 and keep pushing, then the goal is to get up to 32,900 and 33,000, and if we can really start to break out, 33,200 is about where the daily 50 sits on YM. Apple. I mean, let's take a look at this. Apple spent so much time below 155, and a couple of weeks ago we got above 155. I'm sorry, last Monday we got above 155. Got all the way up to 162, and we've just slowly drifted back to yesterday, holding 156. So really, Apple's not selling off. This is just distribution after a nice push up. So, today would like to see Apple hold 157 and a quarter, 157 and a half on any dips. Kind of fills the gap, or it would fill the gap getting down to that zone. But Apple holding up very well above 158 right now. So either way, at the very worst, looking for that 157 and a quarter, 157 and a half on any dips to hold. If we can hold and keep pushing, next stop is 159 and a half, 160. And if Apple has even more follow through, 161, 162, where we recently topped out. If we start to lose that 157 and a quarter, likely coming down to retest that 156. And should that give out, then it's back to this zone at 153.8, 154.7, where the daily 21 sits, right on top of that zone. On to, we'll take a quick look at AMD. So after an amazing run up to third Keltner and above 100, we've had some profit taking back to daily moving averages. Yesterday we slipped below the daily 8, got down near the daily 15 and held into MU earnings. We can see we're having a decent little gap up with the market. So we want to keep an eye on chips. They had a good run up. They've had some profit taking back to daily moving averages, and the first name in chips just reported. So there could be some rotation into chips. It might be time for them to lead again, since they've taken a break and other names have led, like banks recovering from that financial issue, right? So keep an eye on chips. AMD, you want to see a hold of 94.3 on any dips. If we can hold there and take out 96, kind of near pre-market highs, and it's a play up to 98, 99 and a quarter, and 100, 102 and a half. Not saying we hit all those today, but those are targets for the next run up. We start to lose 94.3, likely coming back near yesterday's lows to test 93 and a half. And should that give out, we have the daily 15 at 92 and a half, the daily 21 at 91. So Amazon also had a decent run up recently to 102, and now we've just had profit taking back to daily moving averages around 96 and a half, 97, where the daily 15, daily 21 sit. You can see we had a little wick pre-market to get down to 97 in that daily 21. So again, wouldn't be surprised for a little dip back to fill gaps, maybe to retest those daily moving averages before taking off. But overall, if we can hold above 97 and a half, 98 in the morning, that's pretty bullish. And we'd want to see a push up to 99 and then 100. Where the 99s are the 2-hour squeeze top sits, 100s are the 4-hour squeeze top sits. So, on names like this, and, we had decent reaction to MU earnings and kind of the pattern for them loading long yesterday on the market. But it could still be that they're going to take some profit and bring it back and wait for GDP and PCE. So that's why I say wouldn't be surprised for some of these things to make little pops, dip back, fill gaps, and sit and wait, going into GDP tomorrow. If we start to lose at 97 and a half, likely coming back down to test 97, 96 and a half, 96 at the bottom of the 4-hour squeeze on Amazon. Google. Did a good job holding 100 yesterday and fighting back above 101. So on any dips, want to see us hold 101, fills the gap, and then we can keep trucking up through pre-market highs around 102.5 to get up to 103. If you look left, we had a zone between 103 and 106, let's call it, that we stayed at for a number of days before slipping down this week. So we're coming up to test the bottom of that zone at 103. We could see a little rejection back to 101 before heading higher. If we lose 101, coming back to test 100 and potentially down to 99, where the daily 21 and daily 15 sit. And anything past that, losing 99, we want to target down to 97 where the daily 50 sits. If market were to reverse back down, fill the gap, and head back to yesterday's lows, that kind of thing, we might start to see some of these names that pulled back to their first daily moving averages slip back down to the next one. Let's move on. Meta did a good job holding 198 and then fighting back above 200 for close. On dips, want to see us hold 200, 200.5 where we closed. If we can hold and keep pushing, currently above 202, want to take out just 203 near pre-market highs and a fight back to 205.5 where the next Keltner sits and back up in the middle of this range. Microsoft. 4-hour squeezes, folks. You can see we were running into the top and we just couldn't get through. So the last 2 days, this week, have been reversing down to the bottom of the 4-hour squeeze, where they hold it for a double bottom, and that's where you switch back long. So nice gap up on Microsoft, above yesterday's highs and pre-market highs. So keep an eye on those highs. On dips, basically want to see us hold about 275.5, 275 on any dips. If we can hold and keep pushing through 278, then it's a play up to 280, 282 back at the top of the 4-hour squeeze. We start to lose 275, then we're likely coming back down to test 274 where the daily 8 sits, and yesterday's lows near 272. Netflix. Been strong since last Thursday and just kept going up to that daily 50. Yesterday rejected it to come back down. And not having as strong as a gap up. Obviously, we're not back up near yesterday's highs. So for Netflix, basically want to see a 320. Where did we close? 323.5 hold. If that gives out, we're going to retest yesterday's lows near 321 at the bottom of the 4-hour squeeze. But if we can hold 323.5, a little gap fill, a little dip, and reverse back up through 326.75 or 326.5, then we can make that push back up to 330, 332 where the daily 50 sits, and this recent high of 336. Nvidia. Oh, look at that. Made it right down to that 1 key level I have at 258.89. Held that yesterday like 258.5. And moved right back up, opening above yesterday's highs and pre-market highs. So at the very least, want to see us try to hold 263.5 on any dips. You can see it's where we held, and then yesterday it was resistance. Now we're gapping above it. So at the very worst, 263.5 should hold. 264 fills the gap, so you've got a 50-cent zone of support there. Should we have a dip on Nvidia this morning? As long as we can hold there and start to get back through 268, 269 where we kind of topped out pre-market. Then it's a push through 270 to try to get back up to 274 at the top of the 4-hour squeeze and recent highs. QQQ. Been holding up well. Yesterday slipped down to about 305 with a hair below it, and now about to open at 309. Keep an eye on that little wick pre-market, which went right back to fill the gap at 307. So if we have any dips, basically looking for 307, 308 to try to hold us. 307 fills the gap. And 308 is kind of yesterday's high and where we bounced overnight. So as long as we can hold there, looking to fight up through 310, get back to this 311 and a half, 312. And if we can push further than recent highs around 313 and 315. If we start to lose 307 on the gap fill, then we're likely coming back to test 305, 306 near yesterday's lows in the bottom of the 4-hour squeeze. SPY. On any dips, would like to see us try to hold this 397.7. You can see that wick from the 4 a.m. candle got down near there. So 397.7 up to 398, looking for that to hold on any dips. If that can hold, looking to get back above 399 that we just slipped below. Fight up to pre-market highs, 399 and a half, and then up to a 400. And our zone at 400.3, 400.5. The daily 50 sits right in the middle of that zone at the top of the 4-hour squeeze. Those are kind of the upside targets if this uptrend were to continue. But don't be surprised if we come back to partially fill the gap. If we lose that 397.7, then we're likely coming back to 397, 396 and a half, maybe even back to fill the gap near 395 and a half. Tesla. Made this strong push up to 200, and then it's basically been bouncing between 200 and 190. Yesterday it slipped through 190, enough to get down to about 185. Then reversed right back up, and gapping above 190. So, on any dips, want to see us hold 189, 190. We close around 189 near the daily 8, key level of 190. So I want to see us hold that 1-point zone on any dips. As long as we can hold there, looking to fight back up through pre-market highs around 192 and a half. And then 194, 196 to the top of the 4-hour squeeze. And it would probably take some time to get through there to get back up to 200. If we start to lose 190, 189, then we want to play back to the daily 21 at 188, 187 and a half-ish, and then back down to yesterday's lows of 185 and a half, 186 at the bottom of the 4-hour squeeze. And VIX gapping below 20. VIX got up near 30, and I was talking about how everybody's just thinking short, short, short. I saw in one room someone was like, I'm playing the 40 call on VIX. I mean, it's just not in the cards right now. There's nothing that dramatic going on to cause VIX to shoot up to 40. Going up to 30 is understandable, right? We had some selling, and some of it dramatic. So they took it from 20 up to 30, and here we are back below 20. So we do want to be leery, because when we're below 20, this is the time where we want to start thinking, could they rug pull us? Could we maybe not stay down below 20 and quickly reverse back up? So understanding VIX and when it is time to go long and short, the people that are screaming short when VIX is way up at 30 after coming from 20, those aren't the folks you want to listen to. Now, when we are below 20 and someone's talking about building a short position, that's when stars are aligning a little better. But either way, VIX got down below 20, this gap down. So If we do have some dips for other things to fill gaps, wouldn't be surprised for VIX to get back up to test 20. For upside on the market, looking for VIX to reject 20, to roll back over, take out pre-market lows, 19.15, take out 19, and maybe start heading down to 18 and the bottom of the daily squeeze near 17. But if we're going to go back, fill the gaps, and maybe slip back into yesterday's range, we'll likely see VIX get up to 20, fight through it, hold above it, take out 20.5, 20.75 where the daily 50 sits, and then back up to 21.7 where the daily 21 sits. That's if we're going to reverse near these 4-hour squeeze tops and go back to look like we're going to take out the bottom again. So hopefully this was helpful for everybody. Thanks for tuning in. Good luck today. We'll see everybody in the chat. And remember, patience, we still have GDP. There's a couple of scenarios, right? Let's try to visualize it a little bit. Scenario one. Scenario one is we want to wait for GDP before we make a move. I could see them run up and tag this zone and then slowly drift back to 40.20, maybe even 4,000. Keep it down in this range going into GDP most of the day with maybe a late day ramp. What's another scenario? They could rally into GDP. So we hold 40.20, 40.30, we get above 40.50 and start to live life and close candles between 40.56 and 40.80. Kind of nudging up to the top of our range going into GDP, so they could maybe dump it back dramatically, get everybody trapped short, and then take off again. And I think that's pretty much the two likely scenarios. Could we say, oh, why don't they run into this and then dump it back to yesterday's low or lower going into GDP? I don't think they're going to make that kind of a dramatic move. I think today is going to be, we're still waiting, Monday, Tuesday, we were waiting for MU, in my opinion, for chips to report earnings, and now we get that good reaction. They could bring it back, park it a little more, build the position more long, going into GDP, in case we get that positive reaction. So, that's it for prep today. Hopefully this was helpful for everybody. Thank you all for tuning in. Sorry, I'm just double checking. One last thing. All right, yep, that's it for prep, folks. Sorry. So yeah, thanks for tuning in. Hopefully this is helpful for everybody. Patience. Lock some profit if you did swing some of the calls that we mentioned yesterday. And be ready for those dips down to key levels that I called out on every name. Wouldn't be surprised on some names that haven't gapped that much to do a full gap fill. Do I think we're going to quickly do a full gap fill? No, I think we would dip to 40.20, fight back up to 40.30, reject, consolidate, before we make any kind of dip back for a full gap fill on SPY or ES or anything. We might not get that full gap fill. We spent a couple of days, like I mentioned, down at the bottom of squeezes and looking like we're going to dump, and now we've gapped near the top. So we might spend today consolidating up here into GDP tomorrow. So, good luck today, folks. Thanks for tuning in. And we'll see everybody in the chat. And if you're new to Predicted Trades and this is your first time tuning in, there's a link in the description of this YouTube video where you can join our Discord server for free. You can start to learn about our system. We have an entire system in one tool that works on your options charts, on your equity charts, on your futures charts, and it provides a roadmap no matter what you're trading. Mostly in here, I'm calling out trading futures and options. We do have a few folks in here that do equity trading, common stocks. But for the most part, our focus is on options, on futures, and in being in, a number of turns. Yesterday, we hit calls calls first for about 50%. We hit doubles for about, we hit puts then for about a double. And then, midday, that drop, we hit puts for about triple, and then we turned around and hit calls up for about triple late in the day. And a number of us swung some calls into today because it was all about that MU reaction. And I was not shocked to see a positive reaction even on negative numbers. So if you're new to predicted trades, definitely join our Discord for free. Start to learn our system. It is a paid service once you sign up to get our tool on a daily basis. Every Thursday is Free Thursday, where you can test out a free version of our tool, which will work on your options charts only. So if you're new to predicted trades, definitely come join us. Come join our Discord, and then join us tomorrow for a Free Thursday so you can test out the tools. And as just a heads up for the folks that stuck around to the end, next week is spring break. I'll be on spring break with the family. I'll still be outputting the tool every day like I do. I'll still likely put out a couple of preps next week. I'll give some direction in the room, but for the most part, I'm going to be a little light on trading next week. So, good luck today, folks, and we'll see everybody in the chat.